my expectation of a synergistic benefit is only on paper. How much should I share with them? So that's another element from fair market value to go towards a deal value or a deal price needs to be. So a lot of people say, okay, if there is a tax benefit, let's split 50-50, let's do a present value, look at it, and how do we get the best out of it for both the parties. Accounting differences, jurisdiction differences, if you're looking at different companies. While just to, there is one more detailed slide after this. But just to say this, yes, valuation is an art or a science. It takes a lot of things into account. You need to really step into the shoes of the company or the business which you are not going to evaluate. You need to be a pragmatic and a person who can think about putting this, are you going to put your own money into this? Practical issues. There are a lot of practical issues and challenges in valuation, and more so in an M&A. If it's an internal transaction between a holding company and a subsidiary, there's no leakage of value or control. But if there is a transaction which happens between third party, obviously you are losing your cash. You're using your currency as shares, and you may lose that business. But I think with best practices, you can navigate that, you can manage it, and you can mitigate it. So I think the statement at the bottom, it's impossible to eliminate all uncertainties, like in any business. But because you're doing a valuation, you need to step into the shoes and try and de-risk it or minimize it, or try and be practical about it and how to move forward. Because ultimately, there's one difference. Valuation per se is an opinion of a particular firm, company, person. Unlike other fact-finding exercises, you can get a due diligence done, you can do a forensic done. But those are fact-finding. All that happens in evaluation is all put together needs to go into a small range, which is a valuation range. So if somebody cannot just say, okay, there are open square brackets and deal it separately. No, it cannot happen. You need to do it. The buck stops at the value. He has to take an opinion. He has to take an assumption. He has to be more logical and rational in doing it. Very quickly, I will not touch upon all this, but these are the common pitfalls in an M&A which needs to be highlighted, which needs to be remembered. We're talking about the focus. Overestimation of synergy, expectation of a high value of the intangibles. This is the key to it. We need to be mindful about the valuation, how it's getting misused. There are a lot of shareholder activism which is happening. There are a lot of proxy firms which are also looking into it. Obviously, our idea is to be fair to all the stakeholders involved, but doing it in a manner that it serves or provides rational and logics for each element or each assumption that's been done. We need to keep it simple. And again, it's not about coming to valuation with a single number. We're talking about doing a scenario analysis, coming to a range of values, securing it, ensuring that we don't follow blindly what is happening in one particular transaction or an expert says so and we do that. We need to cross-check it. We need to cross-check it. Does it make sense? Is there a collaborative cross-check for it? So as it says, it's difficult to build a business, and it's equally difficult to value that business. Questions? Anything?
Thank you, Pinkesh. I think what Parag said correct. You can get 2020 test man and the one day. May I now request someone to train.
As Bhavesh bhai rightly said, valuation in itself is